Have you ever wondered what happens when a meme coin takes a nosedive? Well, strap in because we're going on a journey through the wild ride of Pepe, a meme coin that recently experienced what could only be described as a freefall. Let's set the stage. Pepe, our protagonist for the day, was comfortably perched at a value of $0.0000581. But like Icarus, who flew too close to the sun, Pepe couldn't maintain its lofty position. Over a span of just 5 days, Pepe saw a staggering 50% drop in its value. Yes, you heard that right, 50%. It's the kind of nosedive that gives even the most seasoned crypto enthusiasts pause. Now, you might ask, what led to such a precipitous fall? Well, the reasons are manifold and often intertwined. First, it's no secret that the crypto world is a volatile one. Even the most stable coins can experience unexpected dips, and meme coins like Pepe are no exception. Second, market sentiment plays a huge role in the valuation of cryptocurrencies. Fear, uncertainty, and doubt, often referred to as FUD, can cause investors to panic sell, leading to a rapid depreciation of value. Third, the broader market conditions and the performance of leading cryptocurrencies like Bitcoin can have a significant ripple effect on smaller coins. If Bitcoin sneezes, the rest of the crypto world catches a cold, so to speak. The fall of Pepe is a stark reminder of the risks and rewards inherent in the world of cryptocurrencies. It's a thrilling roller coaster ride, with peaks of exhilaration and valleys of despair. But as quick as the fall was, Pepe wasn't down for the count just yet. Just when things looked bleak, Pepe rebounded with a vengeance. The meme coin Pepe, after enduring a harsh 50% depreciation over a mere 5 days, made a surprising comeback. Within 32 hours of hitting its lowest point, the coin had bounced back by an impressive 33%. This swift recovery was nothing short of a roller coaster ride, catching many investors off guard. So what sparked this sudden turnaround? While it's tough to pinpoint a single factor, several elements likely contributed to this rapid recovery. One key driver could be the increasing average token age, a telling sign of continued accumulation by investors. This suggests that despite the dip, a significant number of investors still had faith in Pepe, holding onto their tokens rather than jumping ship. Another possible catalyst could be the negative 30-day MVRV ratio. Generally, a negative MVRV ratio indicates escalating losses. However, to the seasoned investor's eye, this could also serve as a buy signal. This is because a negative MVRV ratio often suggests that the asset is undervalued, making it a potentially attractive investment opportunity. It's possible that astute investors saw this signal and took the plunge, contributing to Pepe's quick rebound. It's also worth noting that the world of cryptocurrency is notoriously volatile, with market sentiment capable of swinging wildly based on a variety of factors. In the case of Pepe, it's possible that positive sentiment, perhaps driven by social media buzz or influential figures within the crypto community, played a role in its recovery. Yet, amid this whirlwind of activity, not all investors reacted the same way. Some, perhaps spooked by the coin's sharp fall, chose to sell their holdings during the dip. But others remained steadfast. They held onto their tokens, weathering the storm and awaiting the next chapter in Pepe's story. While some sold their holdings during the dip, others held on, ready for the next chapter in Pepe's story. In the wake of Pepe's roller coaster ride, investor behavior took some interesting turns. The average age of Pepe tokens began to rise, a strong signal of continued accumulation by investors. This metric, while somewhat abstract, can be a powerful tool for understanding market sentiment. As the average age of tokens increases, it suggests that many investors are choosing to hold onto their tokens, betting on their future value. But the investor landscape was far from uniform. As Pepe's value plummeted, some investors were quick to sell, hoping to cut their losses. This sell-off behavior is common in volatile markets, as investors seek to avoid the painful sting of a crashing asset. On the other hand, there were those who saw the dip as an opportunity. These investors retained their holdings, anticipating a rebound. This strategy, often referred to as buying the dip, is based on the belief that a temporary drop in price is just that, temporary. And indeed, for these investors, their patience was rewarded when Pepe rebounded by 33% in just over a day. In the midst of this, the 30-day market value to realized value, MVRV ratio for Pepe, turned negative. At first glance, this suggests escalating losses for investors. But in the world of crypto, things are rarely as straightforward as they seem. A negative MVRV ratio can also act as a buy signal, indicating that the asset is undervalued and could be due for a price correction. It's a delicate balance and one that requires careful consideration and a healthy dose of caution. So what does all this mean for Pepe? Well, the investor behavior we've seen suggests a mixed bag of strategies and outcomes. The rise in token age points to a core group of investors holding firm, while the sell-off and subsequent rebound hint at a market still finding its feet. And with the MVRV ratio flagging potential buying opportunities, there may be some room for optimism. With a bearish, short-term trend predicted, the future of Pepe remains uncertain. Despite the volatility, Pepe may present a unique investment opportunity. Now, you might be wondering, how could a coin that is predicted to suffer further losses in the short term be a good investment? Well, it's all about perspective. In the world of cryptocurrencies, technical analysis is a vital tool. It helps us understand the possible future movements of a coin. For Pepe, this analysis predicts further losses in the short term. But here's where it gets interesting. It also suggests that Pepe may find a foothold, a support level at around $0.00000245. Now, that's a low number. But remember, in the crypto space, what goes down can also come back up. If Pepe does indeed find support at this level, then the analysis suggests a short-term target of $0.00000955, assuming Bitcoin stabilizes. That's nearly a four-fold increase from the predicted support level. This period, therefore, may offer a favorable short-term investment opportunity. The key word here is may. Like any investment, there's no guarantee of profit, but the potential for a significant return exists. So what's the takeaway? Despite its recent dips and dives, Pepe is not a coin to be dismissed lightly. It has shown resilience, bouncing back 33% within 32 hours of hitting its lowest point. And now, it may be poised for another leap, offering a potential short-term investment opportunity for those ready to take the risk. While the crypto market is always unpredictable, those willing to ride the wave may find that meme coins like Pepe offer a thrilling investment journey.